Hello everyone and welcome to this module on conventional conforming loans. Let's begin with a conventional loans overview. Conventional loans are mortgages not part of a specific government program. These are private programs and they're not government insured or backed. There are two categories of conventional loans that you need to be familiar with: conventional conforming loans and conventional non-conforming loans. Conventional conforming loans conform to standards of Fannie Mae and Freddie Mac. However, conventional non-conforming loans do not conform to the standards of Fannie Mae and Freddie Mac. Let's begin by an overview of Fannie Mae and Freddie Mac. Fannie Mae is also known as the Federal National Mortgage Association, or the FNMA, and Freddie Mac is also known as the Federal Home Loan Mortgage Corporation, or the FHLMC. Both are government-sponsored enterprises, or GSEs, and they function to expand the secondary mortgage market. They securitize mortgage loans in the forms of mortgage-backed securities, or MBSs. Let's talk about conforming conventional loans. Lenders underwrite and fund conforming loans, and these conforming loans are then sold to Fannie Mae and Freddie Mac. Fannie Mae and Freddie Mac then securitize these loans and sells them to investors in the open marketplace. Let's do an overview of conventional conforming loan requirements. They require a credit score of 620 or higher, and this is something that you have to remember. The housing DTI requirement, which is also known as the front-end DTI, is 28%. The total DTI, which is also known as the back-end DTI requirement, is 36%. However, for total DTI, it could be up to 45% with compensating factors such as considerable assets. There's a maximum LTV of 95% for purchase loans on one-unit primary residences. This means that there must be a minimum of a 5% down payment for purchase loans on one-unit primary residences. Let's talk about seller concessions on conventional conforming loans. Now, if a buyer puts down a minimum of 10% down payment, seller concessions are capped at 6%. If a buyer puts down less than 10% down payment, the seller concessions are capped at 3%. And seller concessions are capped at 3% for investment properties regardless of the down payment amount. Let's talk about the loan limits for conventional conforming loans. Now, the Federal Housing Financing Agency, or the FHFA, sets loan limits for Fannie Mae and Freddie Mac. The baseline conforming limit for 2023 is $726,200 for a one-unit property. It is higher in Alaska and Hawaii, so this is the loan limit for a one-unit property residence in Alaska and Hawaii. It's $1,089,300. The FHFA sets higher loan limits for high-cost areas. So what we discussed so far is the baseline limit. For high-cost areas, there are higher loan limits that can be allowed. And you can check out a useful interactive map on conforming loan limits on loanlimits.org. Now, homes that exceed the FHFA limits require a jumbo loan, and jumbo loans are more difficult to qualify for. Let's talk about Fannie Mae's HomeReady Mortgage. HomeReady mortgages are offered by Fannie Mae, and they do compete with FHA loans. The borrower must not owe money on more than one other mortgaged home, but the borrower doesn't have to be a first-time home borrower, and the purchased property must be the borrower's primary residence. The HomeReady Mortgage is designed to assist borrowers with low to moderate income. The borrower's income generally must be equal or less than 80% of the county's area median income, or AMI. And for low-income areas, you can make more than 80% of the county's area median income and may still qualify. Now, HomeReady mortgages offered by Fannie Mae allows a minimum of a 3% down payment, or 97% LTV. The credit score must be 620 or higher for purchase transactions, and it requires that a borrower takes a home ownership education course if all occupying borrowers are first-time home buyers. HomeReady mortgages offered by Fannie Mae have a cancelable private mortgage insurance, or PMI. It can be canceled when the LTV reaches 80%, and you can have reduced PMI above 90% LTV. Now let's talk about home possible mortgages. Home possible mortgages are offered by Freddie Mac. and it competes with FHA loans. The borrower can have financial interest in one other mortgage property. The borrower doesn't have to be a first-time home borrower to qualify for the Home Possible Mortgage. However, the purchased property must be the borrower's primary residence. The Home Possible product is designed to assist borrowers with very low to low income. The borrower's income must be equal to or less than 80% of the county's area median income, or AMI. Now, the Home Possible Mortgage or the Home Possible product allows a minimum of a 3% down payment or 97% LTV. The credit score must be 660 or higher for purchase transactions. And Home Possible mortgage products require that a borrower takes a home ownership education course if all occupying borrowers are first-time home buyers. It has a cancelable private mortgage insurance premium, or PMI. PMI can be canceled when LTV reaches 80%, and reduced PMI above 90% LTV is available. Let's talk about Fannie Mae's conventional 97 loan. Now, to qualify for the Fannie Mae's conventional 97 loan, the borrower must be a first-time home buyer, and at least one borrower must have not owned a home in the last 3 years. The loan must be a fixed-rate mortgage, so ARMs are not allowed. The property must be the borrower's primary residence. And Fannie Mae's conventional 97 loan requires that a borrower takes a home ownership education course if all occupying borrowers are first-time home buyers, or if the LTV, CLTV, or HCLTV is above 95%. Now, Fannie Mae's conventional 97 loan has a cancelable private mortgage insurance, or PMI, and PMI can be canceled when LTV reaches 80%. Importantly, there are no income limits for Fannie Mae's conventional 97 loan. Now, Freddie Mac's HomeOne loan is similar to Fannie Mae's 97 loan. The borrower must be a first-time home buyer, and at least one borrower must have not owned a home in the last 3 years. The loan must be a fixed-rate mortgage, so ARMs are not allowed here, and the property must be the borrower's primary residence. Now, Freddie Mac's HomeOne loan requires that a borrower takes a home ownership education course if all borrowers are first-time home buyers. And Freddie Mac's HomeOne loan has a cancelable private mortgage insurance, or PMI, and PMI can be canceled when LTV reaches 80%. Importantly, there are no income limits for Freddie Mac's HomeOne loan. And this concludes our module on conventional conforming loans.